It is June 6th. Michael Vaughn with Brian Acker. Brian, a lot to talk about today, but let's have a little year-to-date performance review of the Canadian and U.S. equities funds.
Absolutely. The Acker Finley Select U.S. Value Fund. We'll be looking at the benchmark in Canadian dollars, the S&P Total Return Index. That's at 10% as of last night. And we're about, I would say, a little over 9%. So
Year to date.
Year to date. So we're keeping up in this very volatile, hectic market. It seems to go up every day. And in Canada, we're at 1%, and the index, the S&P TSX 60 total return is 2%. So we're just lagging there by 1%. So.
Well, all-time record highs. We're just kicking it, yes, pretty well. Is there anything left in this market? Maybe that tells me it's time to sell.
Well, interesting enough, I know Trump took a beating worldwide on the Paris Climate Accord.
Yes, wrong call for sure, but
U.S. But on that day, the market hit new highs.
I know.
So I believe markets as signals, or as giving signals, and certainly we remember back in 2008 and 9, it seemed the Federal Reserve was making every wrong decision possible going into that financial crisis. And once they made a decision, the market would be down 400 or 500 points.
Yeah.
Instantly on those decisions. So if you believe in signals, I mean, the market is giving that signal. But let's talk about the S&P 500. I was on BNN on Friday. We have fair value of the S&P 500 at about $29.50.
whoa!
So it's about 21%, if you will, higher than today.
And what's the analysis that's based on? Not just analyst reports.
No, well, what it does is it literally is a bottom-up process where we take every company in the S&P 500.
Yep.
We actually take their earnings estimates and their balance sheets that have been reported. So we already have the first quarter, all the balance sheets in for the 500 companies in the S&P 500. And so when you do a bottom-up analysis, and certainly we factor in higher interest rates than what we have today, but we do come up with a fair value of $29.50, which is, again, 21% higher than what we are today. All over the internet, I have to say, all over the internet, there's always somebody saying this market's overvalued. They see no value in this market. We're quite the opposite, actually. We actually see value, and for, I guess, growth at a reasonable price, or value managers such as us, I mean, literally, I haven't seen the opportunities or the number of companies that have either broken down or down a lot than what I see in this particular market. So again, crossing our fingers, we see lots of opportunity in this U.S. market still.
Well, you called this bull a long time ago, and I'm glad you did. But let's look at the bond market, the bigger market. That's supposed to be the one that sends the signals for the future.
Absolutely.
And it's going up too.
I know. So, look, if I was placed in the equity world, I mean, I would say, wow, we got 3% growth going on. We've got productivity. We got balance sheets. The CEOs are managing these balance sheets in the sense that they're taking capital out of these companies. In other words, they're getting higher rates of return. Just take a hot skip and a jump to the bond market.
Yeah.
What do I see? I see depression. I see a massive recession coming. But again, what's different this time in the bond world is
Central banks.
Literally, if I take total of all the fixed income out there, which is actually about $54 trillion, a third of that is now owned by central banks, and they're buying daily. Yeah. Okay, so is the bond market really the economic sending economic signals anymore? You know, I have to question whether that's even at stake. But again, for us, both equities and bonds going up, I mean, that's a good thing for customers these days.
Well, the world has changed with the QE. I mean, they were in there for so long. I mean, that's why they've got the stockpile.
in the first quarter of 2017, over $1 trillion of
Yeah.
QE
Yeah.
was big. The central banks combined, literally, have printed $18 trillion of money. And just this past week, we've had actually the ECB and Japan exceeding the Fed's balance sheet for the first time.
Wow.
So those two countries, both the ECB and Japan, they're just buying everything in sight. So
It can't go on forever.
no, very good point. But I think there's still more upside, both in the U.S. dollar and U.S. dollar assets. So.
Thanks for your analysis again, Brian. A pleasure seeing you. I hope to see you in July.
Michael, always a pleasure to see you. Thank you.